So that's all the introduction you're getting to keywords today. First of all, welcome to the Capital Markets Day, and thanks for coming. Good to see so many familiar faces. So unlike last year where we sort of had a deep dive on one of our service lines, which was art, this time we're going to take advantage of the fact that we have the entire senior leadership team of Keywords in London for a strategy conference to allow them a bit of a voice so that, you know, you're not just hearing it time and time again from myself and from David Broderick. And what we're going to try and do is use a series of case studies and everybody else's input to tell a little bit of a story as to how we are building Keywords, and as we're building, how we're creating value both organically and through acquisitions, drawing on the expertise and the talent that we add to the group, and how we're able to use that increased scale, that increased capability and the increased sort of financial and public profile of Keywords to build a more reliable and scalable platform. Very quick reminder, Keywords is providing technical services to the video games industry. It's a very interesting market. It's clearly a niche business. It has its own suppliers, it has its own behaviors, but it is a global industry, and it's $100 billion in size, a bit more in fact, and is growing at about 6 to 8% per year. And one of the things that's happening, and we'll hear a bit about this later on, is that the market is evolving and evolving very, very fast, particularly this transition from games as a product to games as a service. And that's generating a lot of increased complexity, which is driving the demand for outsourced services. So it's things like the number of languages that have exploded as smartphones in particular reach territories that weren't historically gaming markets. It's the fact that each iteration of hardware, whether that be console, whether it be PC, whether it be smartphone, adds additional capabilities, additional processing power, and that leads to larger content size as games become richer and more high definition. And very important for us, and I think you'll hear more and more of this, is as games trend to a service, so the need for continuous content generation and feeding the game with new content in order to maintain the engagement of the player and therefore the opportunity to monetize the player is becoming a real challenge for many of our clients. So as we go forward, I think again, I hope we're going to demonstrate a bit of this journey that we're on. And, you know, we started our journey 20 odd years ago. And even today, a lot of the outsourcing that's happening in the market is tactical. But what's happening with this increased pressure from complexity and very fast-paced environment is that is leading to a more strategic engagement from companies such as ourselves. Having set that sort of scene, you also need to understand that the market is worth about $5 billion in total, and we'll be breaking that down a little bit further as we go through the presentation. And again, it comes to this whole idea of being trusted, being established, being solid, so that we can partner with our clients as we build this go-to video game services platform. Not going to spend long on this slide. Some of you have seen it before, but we've been busy since we IPO'd in June 2013. So we made 24 acquisitions. We've been growing very strongly organically, and then we've layered acquisitions on top of that. So as we stand here today, our pro forma revenues are about $200 million euros. And that contrasts with about 16 million euros at the time we IPO'd in 2013. In fact, I think we finished 2013 with 16 million euros of revenue. So it's an interesting market. It's large, it's growing, it's highly fragmented. The service provision side is very fragmented, whilst the clients, on the other hand, are quite concentrated. So our clients being the largest video game companies in the world, whether that's Tencent, whether that's Electronic Arts, Sony, Microsoft, and so on. And individually, these small companies, of which Keywords was one, back in 2009, 2010, when we set out on this journey, That fragmentation provides us with a lot of opportunity given our strategy of consolidation. So we'll be exploring that a little bit more as we go through. And then the threads that we'll explore are this focus on organic growth combined with the efforts that we're making to consolidate the industry and to provide a very full breadth of service capability and a well-balanced geographic spread. You will see that we will continue to make half a dozen or more acquisitions a year. This is really part of the Keywords makeup. In addition to delivering our services, you should also expect us to continue to make acquisitions and to integrate them. We're very focused on driving synergies and adding value as we do that. We're not doing this just to collect a bunch of companies together under one umbrella and add their revenues. We're very actively focused on driving value from what we're doing. And then the final thread is this idea of the Keywords as a service provider moving from somebody that's really just been given the odd project to somebody that's really very strategically embedded with a mutual degree of dependence with our clients. So, onto this matter of the fragmentation and are we able to continue to acquire 6 to 10 acquisitions a year? So, when I talk about a fragmented market, this is what I'm talking about. So, at the moment, when I think about Keywords, I think about this amazing growth machine. I think about a company that has pillars of growth based on the regions and the countries in which we're based that offer their own opportunities. And I think about us as having these 7 pillars for growth, which are the individual service lines, each one of which has a growth strategy behind it. So if we look at some of these, and I'm not going to talk about them all, we've shared with you what we think the market size for those services are, and this is obviously global market size. And we've also shared with you what we think the current sort of penetration of outsourced services are within each market. And then you'll get an idea in terms of the fragmentation, because the last row is the number of suppliers within each of those services. And these numbers are all a bit approximate, as you can imagine. But what it means for us is that we sit here today, 200 million euros. We feel as if we've achieved a lot, but we're really very small in what is a very large market. 200 million in revenue, 5 billion across those 7 service lines. As we go through this process of consolidation and growth, what you'll see, I hope, is that the number of potential targets are very large, and as we go through the presentation, hopefully we'll give you a flavour for why they think it's a good thing to join the Keywords group. So the issue is not so much in most of these service lines the opportunity for acquisitions. It's actually a question of sifting through them and making sure we're acquiring the right companies. So we're going to talk a little bit about that as well. So we can't really talk about acquisitions without sharing a little bit of our track record so far. So on this chart is the 24 acquisitions that we've made so far. You will see that some of those fit in individual service lines, whereas others, including our very latest acquisition, which is VMC, moves across the service lines, so it actually involves 3 different service lines. So, on to deal origination. How do we find these companies? Because they're all out there, there are plenty of them. The first point to make clear is that we've been in this space for a long time, so we know a lot of our competitors. We don't know them all for sure, but we do know a lot of them. We meet them at trade shows. We actually occasionally will visit each other's studios when we're in town. And we talk about who's who in the industry. You know, the reputation counts, and everybody is quite happy to share who's good and perhaps who's regarded less well. Client reputations, we love it when our clients want to share in the keyword story by engaging with us and suggesting which suppliers to them might benefit from being part of the keywords group. And at least today we have at least one of those companies with us who will be able to share a bit of that experience. And the final thing I'm finding is actually coming from you, the audience, the investors and the analysts. You're starting to share with us companies that you think would be of interest to us as well as you come across them in your work. So thank you for that. So having originated these deals, as I said, the issue is trying to sift through them. So first and foremost for keywords, the most important thing for us is cultural fit. That's our starting point. We won't really enter a discussion with a company if we don't think the cultural fit is right. That's a general rule. Having said that, you'll hear examples of where we've acquired companies that definitely didn't have the same culture as us, but we were confident enough that we could deal with that and make changes to their culture. It's also worth saying that on at least 2 occasions, we've walked away from very attractive companies that were very, very good, top of their game. We were in late-stage acquisition process with them, and we decided, no, this didn't feel right. This wasn't going to work. When these guys joined the keywords group, this wasn't going to be a good marriage. So we actually had the maturity to walk away from those deals. Valuation is important as well. We have fairly clear ideas as to where the value of these businesses lie. We've bought enough of them now, and we've set a bit of a benchmark in terms of being able to reference what we've paid for businesses like these in the past. Our valuations have averaged around 1 times revenues or 5 to 10 times EBITDA. And the other thing to say is that, you know, the more of these deals we do, the more structured our whole approach to both the valuation and the acquisition process becomes. And the last thing, we don't get too carried away about the financial performance of these businesses. We've done it enough times now where we've bought companies that haven't been performing particularly well, and we've been able to fix them very, very quickly. So the most important or the least important issue for us is actually how the business is performing financially today. Of course, that affects the valuation, but it doesn't affect our view as to how attractive that business is. So at this point, I'm going to ask Andrea Ballista, who is our global service line director for audio, to share with you in his words how he works with me in particular in originating acquisition opportunities within his service line, which, as I said, is the audio service line.
Thank you, Andrew, and welcome to everybody again. So let's talk a little bit for audio this time, and and how we can target acquisitions. First of all, we need to have a strategy, and it's a part of the global strategy of keywords, and we are going to build the first fully owned network of recording studios in key territories where the video games industry is already well established. So we don't want to set up place everywhere. We know that the market is changing, new territories coming up, and when they are well settled, then we can decide to go. But we want to have a first network of the key points that we can, of course, cross with all the clients' relationships. And why do we do that? We do that since the audio is very specifically a kind of different style of buying from the client side. So some clients want to have multilingual service, and we are able to do that. Sometimes the client wants to go directly in the territories. So in organizing this network on a global pace, we can have best of the both sides, be able to enter the client on one side, and then when they are mature and the strategic advancement in our relationship from keywords is becoming mature, then we can offer also, of course, a multilingual, or of course already buying multilingual and offering a multilingual. So let's talk about, let's say, the acquisition strategy. We are searching for, let's say, local audio entities that are a very good reputation. As Andrea was saying, we are very active on the show. I've been in the market for more than 20 years, so we really know the people very well and are the same guys, okay? And but this is not enough, and we would like to pick up them when they are really willing to join the vision of keywords. So the message is, okay, we are not here just to buy and then we forget you. You will be part of a bigger family. If you are marrying the vision, then as Andrea was saying, yes, that's a kind of good ground for starting a conversation. At the same time, we, as we say, we have a good relationship with them, and of course, we really need to go, let's say, and have the relationship we have them, as we said, and we are going to start from there to build our ground. And at the same time, as Kia was growing, we are more and more becoming our reference buyer. So if someone is coming out from, let's say, 15 years or 20 years of very good services, very good relationship, and they want to see kind of a different future, they are coming to us now more and more. And of course, and we are trying to find the place, if it's possible, if it's consistent with our strategy. That's basically what we do. Yeah.
Thanks very much. Thanks, Andrea. Very good. So, to Andrea's point, that these companies are coming to us more and more and asking to join the Keywords family. So we thought we would explore what makes Keywords an attractive acquirer. It's one thing for me to sit here as the acquirer and to try and speculate as to why companies would like to join us, but we have the benefit of having companies that have joined us. So I'd like to invite three of those to say why they decided to sell and why they decided to sell to Keywords. And we'll start that with Andrew Tosh, who is the CEO of GameSim, who was the first engineering company to join Keywords.
Thank you. Yeah, so the company that I founded, GameSim, we're a software engineering services company. And we've been in business for almost 10 years, always profitable and doing fine. I was the sole owner, and I really wasn't looking for to be acquired. It wasn't really something that was even on my radar at all. And then one of my biggest customers actually emailed me and said, we'd really like you to talk to Andrew Day of Keywords. This is also, this customer is one of the biggest video game companies in the world. So, of course, I'm going to have that meeting. And it was, to my surprise, Andrew is as you probably have already seen so far, is just very open and very clear with what his strategy was and what he was trying to do, and all the way down to what his valuation process is and so on. It was really it was just a great process, and it really felt like I understood with the vision and what he was trying to accomplish. I also really like the idea that there wasn't an engineering services line at this point. So it was kind of a new set of strategies for me and my team that we could help grow that in the same way that they've already done with a lot of the other service lines. And then finally, I went to a conference where there was a number of other studios, some of these folks next to me actually, that had already gone through the process, and I got a chance to talk to them, and all of them were saying the same things about what a great process it was and how well things had gone, post-acquisition. So we agreed on terms pretty easily and went through the due diligence process. And I tell you, the final deal that got signed was pretty much identical to what Andrew said in the very first meeting that we had. And I think the word is kind of getting out in the industry that is the case, that that these acquisitions are going well. And I think that goes to your point as well of why they're maybe starting to seek us out in cases because of that reputation. And then in terms of organic growth post-acquisition, it was pretty interesting. It was on May 17th of this year that we actually closed the acquisition, and it was May 22nd when the Keywords sales team set up a call with me and one of the biggest software companies in the world that GameSim had never worked with before, and that turned into a contract that my folks are executing right now. And that's an opportunity that there's just no chance we would have been able to get on our own. We just didn't have that sort of reach on our own. By having Keywords sort of administrative support, we're able to really expand beyond what we ever would be able to do on our own.
Great, thanks, Andrew. And Fabio, from one of our latest joiners in Andrew to you and Benari Sonori as one of our earliest joiners, perhaps you could share your perspectives.
Yes, basically our experiences, we knew Andrew, Giacomo, and a few other people of Keywords as being one of the main companies in the localization industry. I had founded Binari Sonori in 1994 with Andrea and Fulvio, who are also here. And we have been running the company successfully for 20 years, basically, before reading the news that Andrew had floated keywords, and before getting a phone call from Andrew saying, hey, would you like to join? Well, I think, remember, we had a meeting, we discussed. I mean, we never really planned to join, neither to be a public company. So actually, we were a bit suspicious about the whole operation, if I can say. We didn't know much about the stock exchange and so on and so forth. So what we did, actually, we were the key players in the AAA industry for video game localization, doing translation, doing audio, with also the experience of expanding in Asia with an office in Japan and the US. We knew kind of the pain that it takes to develop new markets and develop the sales and all that stuff. So we told Andrew, okay, let's talk about the industrial plan, because we like the bottom line, but also we care about the future of our people. We have been growing the relationship for a long time. And this is when actually we were positively surprised to learn that not only the surface was interesting, but also it was a very friendly organization, very friendly company, where we were discussing what would be our role as managers, also in terms of our staff inside the group. And I can witness that after 3.5 years, three of us are here, other people are now working on projects, but also taking responsibilities on a global level and regional levels and so on. So it has really been a win-win. I can definitely tell my son why I did that rather than being, the heroic entrepreneur, because it really helped us doing what we wanted to do with the scale that we needed to have to execute. Yeah, that's basically it.
Thanks, Fabio. And now, Fred Stockton, perhaps you could share your experience.
Well, like my colleagues here, I have some similar experience with both Fabio and Andrew. Like Andrew, we were not for sale and had no interest in selling. We were a successful 15-year-old company. We were #1 located in the United States, doing what we did. We were very profitable. We were self-funded, and frankly, we were enjoying the life of a successful private company. And we had very strong relationships with some pretty big clients, people like Microsoft and Warner Brothers. And so we felt very good about ourselves. And then this guy by the name of Andrew called and said, can I come visit with you? And my experience is similar to both of these gentlemen in that Andrew was extremely straightforward. His vision was very compelling, and there was no playing around. It was really, I'd like to think about joining us. Here's what we'd be able to value you at, and here's why you might want to think about it. And that was it. So even though we were pretty proud of ourselves and pleased with ourselves, we are playing in the land of giants. And this was very obvious to us. We were a very small company, less than 10 million of annual revenue, playing with billion-dollar companies. And we had already had some experience where we had run out of capacity taking care of one of our clients and had to tell them we couldn't do as much work as they wanted us to do. And we kept thinking, what's going to happen when somebody asks the question of what if we couldn't meet their needs, or maybe they're taking too much risk working with such a small company? So we were already concerned about that. Further, we'd already seen some great growth opportunities that we either couldn't or were unwilling to put our own capital at risk to go take advantage of because we'd built up all this value. So we started thinking a lot about that. And the final thing we thought a lot about were the people. We did have some really wonderful people that had come on board early days, and most of them were still with us. But we didn't provide much of a long-term career path. And most of these people that joined us in their 20s, and this was their career, and they were doing very well. But how were we going to retain them? How are we going to keep going? And finally, we were competing in a world of over 100 competitors. And we were US-based, and many of our competitors were based in countries where the cost of labor was less. So there were many risks facing us. So we thought about it, and not very long, and decided that we really should pursue it. Well, so what happened? We were the second company to come into the art group after our friends at Laksha was the first company in. And like Andrew, the excitement of being able to build out a worldwide company was wonderful and very exciting for those of us. We were able as private owners to take some cash off the table. That was great. But we were also able to take our private equity, which all of you know is very illiquid, and turn it into public equity. So if we were part of this success, we would also be shareholders that would get a chance to not only gain from that success, but also on an individual basis decide when we would, what we would do with that equity. As far as team members, we immediately gave our team members a huge set of opportunities. We gave them the ability to have career paths, to grow, and most, if not all, of our team members are still with us. The 3 partners are all still here in some capacity, so we all got growth opportunities as well. We also brought formal HR systems, training, the kinds of things that small companies very much struggle to do are now available through Keywords, even opportunities for some options and things that were never available to our key employees before. So lots happened. From a client standpoint, what's been really rewarding is those really wonderful client relationships, which is a key in all of our businesses at Keywords, is we are now able to supply them with a complete line of art services. And it's far broader than what our studio could do. And now with the family of art studios we've put together, we can go to our best clients and say, now we can offer this service that we didn't have before. We can offer this service that we didn't have before. So we have a complete breadth. So it's been a win-win all around. And I can tell you, if we had to do it all over again, we'd do it faster.
That's good. Thank you all. So we've heard as to why you might join Keywords. We've heard about the fact that there are plenty of opportunities and that we're quite good at spotting them. Now, what happens to these businesses when they join us? So because you guys are numbers guys, right? Well, I thought I'd share some numbers with you. So coming into Keywords, the return on investment typically for these businesses is about 10% return on investment, what we pay versus the profits they generate. Wind forward a year or two. So the first thing that happens is we help them improve their profitability. We have tools and we have the management focus and everything just to focus on the profitability. These are all good companies at delivering services. They're top of their game when it comes to that. But just through a few changes of focus and a bit of emphasis, we can help them get higher profitability. And then, of course, we can help grow the top line as well. So typically what we're seeing is after being inside Keywords for 2 to 3 years, these businesses are generating something like 15 to 30% return on the original investment we made in those acquisitions. So long may that continue. So to summarize from this section, what we hope we've demonstrated is that, first of all, we do have a clear acquisition strategy. There are plenty of opportunities out there, and we're using our knowledge and expertise to sift through them. And the final thing, of course, which is all important, at the end of the day, we do have a good track record of delivering value from these acquisitions. So we'll pause quickly for any questions at this stage.
Can you keep the multiples, the acquisition multiples, within the parameters you spoke about, given, as your rating's been climbing, have you been able to do that? Or, do you see the expectations of the vendors in terms of multiples move up with your multiple?
Yeah, I think we can. I think it's possible for sellers to get confused between the value that they have as a small independent business and the value that Keywords has as a very different animal. I mean, we're on a completely different growth trajectory. We have a different risk profile to our business. We have a lot, I would say, higher quality of earnings generally. And the way I look at it is, when we were little Keywords back in 2009, 2010, single site company, 50 people, 2 services, probably 60% dependent on one single client. We were a very fragile entity. And if somebody had come along to us at that stage and offered us 1 times revenues, we probably would have jumped at it. So, we've been there ourselves. We know what that looks like. We know what that feels like. And that does not feel like a company that deserves the same valuation as Keywords has today. So I'm quite happy to have those conversations with people. And I think, it's not about holding people back. It's just about being fair about what you've got and how much it's worth, really.
24 acquisitions. Any mistakes?
Yes, we've had. I have to say, I think our record is pretty phenomenal. So we have made 24 acquisitions. 23 of those have been great. 24 have been okay. And the one that was okay, what happened there was, it wasn't so much about the choice of company or how much we paid for it or anything. What happened was there was a particular set of circumstances which led to an awkward integration. And during that awkward integration, we lost some of the key people in that company. So we regret that. But it was, to put it into perspective, this was a kind of a million, call it €1 million company. 6 months later, in exactly the same territory, exactly the same space, we bought a company that was 5 times the size of them, and we picked the bigger company up and we moved it into the smaller company, and that process, frankly, kind of broke the spirit of those guys. So we've learned a bit from that, but it wasn't intentional. We wouldn't have bought them in the first place had we known we were going to buy the bigger company later on.
You mentioned you had culture as your number one priority, and 24 acquisitions and 2 that you've walked away from seems a remarkably high hit rate. I was just wondering just how diligent you are there and what sort of those cultural characteristics you're really looking for.
Yeah, so when we say we've walked away from 2, obviously we've decided not to buy a whole bunch of other businesses in that process as well, but that happened earlier on. So normally by the time we get to a letter of intent, we're pretty certain that this is the business that we want to join Keywords. So we're prepared to accept that sometimes we get it wrong, and we got it wrong in 2 out of those 26 cases. So no, I think we are pretty diligent in the whole diligence process, but in terms of measuring the cultural fit, it's not easy to do. Culture is a very sort of amorphous thing, right? But we have an expression, we use it a lot internally. We talk about, is this person a Keywords person? You know, when deciding if we're building the team internally and we're hiring from outside, we know what we mean when we say, is that a Keywords person? And we apply pretty much the same test to our acquisitions. So do these people sort of behave in a similar manner to Keywords? Do they have the same sort of vision? Do they really care about what they're doing? And that comes first for us. So I think we've been pretty good. So we've got a change of actors at this stage. So I'm going to hand over at this stage for this section to my colleague Nicolas Liorzou. Nicolas is the Regional Managing Director for Keywords for the Americas. So he takes care of everything from South America through to Canada in terms of providing a support function to the service lines. So Nicolas, over to you.
Thank you very much. Bonjour tout le monde. Hello everybody. So thanks Andrew for the introduction. Integration is indeed quite a major part of our day-to-day now. So really going through how we integrate and build synergies through it. And the approach for all of this is and needs to be quite flexible, actually. There's, in each time, we need to be able to adjust to the context of the acquisition and the acquired companies and target companies. But we always would make sure that we have a few common denominators through it. First, all acquired companies need to fit with our service line based organization. Second, we would always make sure that we will be deploying our common operation platform. And eventually, third, we'll leverage right away all sales and business opportunities with the rest of the group. Then again, there's a range of different cases when it comes to integrating different companies. When we acquired standalone studios, for example, and we would call standalone studios the ones that either are on isolated territories where we're no present at the point, we have no presence, or whether they have like new services that are not like obviously overlapping with our current offer. In those cases, then we try to limit that to the minimum range of integration, meaning that we'll bring the companies within the service line organization, and again, which will bridge sales opportunities, But overall, we'll strive to limit disruption in the business, given that we'll want them to go on being successful in the same way they've been successful so far. In other cases, we need to go for a deeper integration somehow. That'll apply when we have strong overlap, namely in territory. So that would apply, for example, for all the acquisitions that we made in the Montreal area, where we have a big studio locally, we have a very strong presence locally, and then it just makes sense to be able to integrate as well operational activities locally. It's also been the case where we have a strong functional overlap. For example, in companies that would do a service that is already being provided at Keywords, then it just makes sense again to make sure that we all integrate them together and that we work on synergies and operational growth. So that would be, for the example, the case of Babel and very lately of VMC, obviously. In those cases, we'll deploy our existing processes and seek, all possible operational synergies, with also quite a focus on margin enhancement overall. And in some cases, and I would talk more specifically about the cases of VMC and Babel, which we want to even go even further than that, stating that those companies had quite a cultural mismatch compared to Keywords. And in those cases, we'll want to go further by also changing quite radically the company somehow to be able to twist their culture and make it fit with our own expectations when it comes to company culture. Now, also regardless, when we acquire companies, it's always to grow them. We acquire a company to grow together, to grow them, but also to grow us, obviously. And so we do expect all companies joining to take advantage from our global platform to sustain their own organic growth and to sustain ours as well at the same time. And we'll support them in doing so. Taking the example of Alchemic Dream, for example, with Fred Arens leading that company, originally based in Quebec and some remote place, actually, Shawinigan, Quebec, with a global network of remote customer support agents, so part of the customer support service line, but it was actually the first one that we brought in there. It's ever since been actually able to deploy all its customer services throughout 7 of our studios globally. So with a network that was kind of remote beforehand, quite localized in Quebec, we've been able to, again, deploy those services in 7 other studios of our group and eventually triple the revenues of the company. So that's kind of the story that we're trying to bring forward. So for all of this, and to make these integrations happen, we also do have a methodology, and which we kick off yet from the very initial stage of the acquisition process. And Fulvio Sioli, Regional Managing Director for Europe, will be able to talk you through that.
What's happened during the first 100 days? The goal we want to achieve post-acquisition are usually carefully planned during the due diligence phase, because in addition to the standard check and control we need to do, because it's a due diligence, we need to understand what is the chemistry of the company. That means what has been the real success factor that driven this company. And those factors need to be preserved, because continuity and stability are the 2 main keywords that need to remain post-acquisition. So what we do is to share always during the due diligence an integration memorandum that is a sort of document in which we describe the way in which the business will be integrated, and we also describe how our matricial organization works. Again, to remain to maintain continuity and stability. Another point is prepare a good communication plan externally and internally. Externally, because we need to reassure the client that they will continue to work with the same people they know before, and internally because we need to share with the team the history of keywords, the vision of keywords, the strategy, and also to show to the team what will be the new opportunities, the wide range of new opportunities that they will have, either as company, either as employee. In addition to this, we need to implement some group policies, possibly blended them with the existing policies in the company and with the local norms. And last but not least, we need to implement also a tiny but very solid financial layer, because we need to gather reliable numbers from day one. Most of those companies are very focused on production, but what they have to learn is the way to transform production data in financial numbers on a monthly basis and on accrual basis. And in the end, we started the implementation plan. That implementation plan, we did the service line with the business development and with the support of the regional support function. On this respect, I would like to introduce you Max Reynaud, former owner of one of the largest acquisitions we did in 18 months ago.
Yep.
And my competitor for 20 years.
Yeah, exactly. Yeah, because we used to be fierce competitors for 20 years. We started in the mid-90s together, not together, I mean competing together. But in the very same area. The market was quite different at the time, but promising. Yeah. And when we joined Keywords 1.5 years ago, we became colleagues. Well, there's many things that I could say, but I would like to confirm what Andrew and the other colleagues said before. The plan was quite clear. When Andrew came in and to talk to us, he was very straightforward. And of course, we've seen what Binari did, and I think it was the best decision. At that time, with all my partners, of course, it was not an easy decision when you sell your company, but we had a clear awareness that we were close to our top ceiling. It was quite a nice top ceiling actually, because we had an extremely good redemption and commitment with clients for 20 years. But the market is consolidating at all levels, and not only in the video games. And Keywords was a unique opportunity. And so going back to the scope of these slides, which is the first 100 days, I had to say that on the synthesis side, one of our biggest weakness was on the reporting and the budgeting numbers. We were not really that good on that. And so one of the big benefit of joining Keywords, actually I would say a little bit painful as well, because we were really not ready at all of so much efforts into data collection, data reporting, budgeting, and so on. But it was the first step of a good integration. And then now, 1.5 years later, I would say that the integration is progressing again. We have some senior resources from the synthesis audio department who are joining the service line of Andrea. So the vision is there, is shared, and there's still a lot of things to do. So that's it.
Thank you very much. And now integrating is bringing companies together, but somehow it can only happen if we manage to bring people together. On each new acquisition, I mean, we have this message and we have this same communication process and same communication package that we do deploy at each new acquisition, and it always ends up with the same message for everybody. It's not because you acquired the last one in the series that you get to be in the bottom of the list in some hierarchy somehow within our acquisitions. And day one, you are now a Keywords employee in the exact same way and with the exact same status that any Keywords employee within the group. And that is something that we really very strongly try to show as a message, also by changing the vocabulary as well, in the sense that day one, we stop talking about acquisition, actually. We talk about integration, we talk about synergies, we talk about bringing people together, but we don't want to show that, it's one taking over the other. It's all being able to bring something all together. And for this, I mean, we also have HR department helping us, with Gerry Cleary here, who is in charge of also maintaining the golden rule of 9 within the group, which is a core policy when it comes to how to define our culture. So Gerry, please talk to us through it.
Thank you, Nick. Yeah, so as Nick said and Fulvio mentioned earlier, the rule of 9 forms part of our Memorandum of Integration, and that message goes out on a very early day to everybody who's joining us. We further reinforce that through standardized induction right across the group in every studio, so the message is constantly being reinforced as to this is how we operate as part of Keywords. To help with that, then, we integrate the service, internal service departments as quickly as possible. So whether it's HR, IT, finance, they become part of the regional and the global groups. So they understand the message, they're getting the same thing coming across. Interestingly, quite often in the smaller acquisitions, those support services just simply didn't exist. So now, as part of the acquisition, we're providing those services internally and allowing the team members to really go out there and do what they do best, be it audio, localization, or engineering. So that saves them a lot of time and a lot of pain and effort. So all of this together, between our rules and between the additional support that we're giving them, allows them to grow their teams much more quickly and gives them opportunity to expand.
And so while integrating, and we'll also be looking at measuring operational efficiency as well throughout the process. And for this, Giacomo Duranti, our group COO, will be able to share some thoughts as well.
Good afternoon, everyone. Yeah, so it's to be successful in our business as we've been all these years. It's all about operational efficiency, on top of having a sound strategy for our company, as we have demonstrated. And to manage the efficiency, operational efficiency, we need to measure it. And we do that through operating systems that are helping on the production tasks of the day-to-day work. And in the meanwhile, they're tracking in details all the metrics that we need to correctly evaluate the business without sort of burdening with bureaucracy the production staff who should be really focusing on their main tasks. This is something we do with new businesses, onboarding them on the operational systems very early in the process. It's certainly part of the first 100 days, sometimes first 100 hours of integration, because it's very helpful for the businesses that are acquired. More often than not, they would not have focused so much on being able to do that, and so we're really giving them tools to work more efficiently, and at the same time report a lot more easier the numbers and the metrics, and essentially giving ourselves a high-level view of everything that's going on across the world without disrupting their tasks with having to report. So these service lines, these tools, these systems are for service lines. They're dedicated to service lines across all geographies because we manage our service lines globally. So any studio would be able to use this, and the global coordination of the service line will also be able to use this to help optimizing the way we deliver the service. Here we have a collection of some of the tools in action and some of the dashboards we use then to look at the data so that we can have, with the push of a button, real-time information of what's happening and make decisions very fast. Essentially, it's really important not only to managing the efficiency within a studio, but it's also very important because crucially it allows us to enable the collaborating across studios, as our art colleagues has mentioned earlier, and for all the service lines, we'll either work at the same time on the same project, or we will be cascading the services one after the other in an integrated fashion, and tools help with that. And very importantly, it also allows, as I was mentioning earlier, the global coordination of the service line to further optimize resourcing so that we can keep utilization high in all our studios across the service line without needing to duplicate excessively these efforts.
Thank you. So we talked about how we integrate new companies within the group, but somewhat, I mean, we also need to talk about the other way around, which is how do we leverage those new companies joining are bringing to the group in our current and existing setup to be able to enhance organic growth somehow. So for this, I mean, we have a perfect example in Tokyo with Chris Kennedy, Regional Managing Director for Asia, who will talk about his journey in Tokyo.
Great. Thank you, Nicolas. And thank you as well to the audience for joining us today. I just want to speak for a few minutes about Keywords Tokyo. As Nicolas mentioned, or in the first panel, we heard from some acquired companies on how joining Keywords brought new growth potential for them. But on the flip side, each acquisition offers existing studios the chance for growth. And Japan, as I'm sure many of you know, is a large player in the games market. It's one of the oldest, one of the biggest, one of the hubs of development of games and also the consumption of games. So back in 2010, when Little Keywords was taking some of its first steps, Japan was a prime place for us to decide to set up. And when we went in there, we went in with a double-sided approach. On one side, it was going to be an expansion of production for Dublin headquarters at the time. But we also decided to make an investment in Japan, to build a local client base, to learn about potential vendors, partners, get access to that talent pool there. And Keywords, grew. And the acquisition started then in around 2014. And one of the earlier ones, as we heard, was Benari Sonori, a premier provider of translation and audio service. And like many of the rest of us, I knew Fabio, I knew Fulvio, I knew Andrea. So it was a very quick integration. Welcome aboard. Let's combine forces, and we did. Within days of the announcement, we were already sitting in front of around the table with some of our Japanese clients, and they were very pleased. They were happy to see the consolidation, the strength that the acquisition brought to our offering, and that kicked off many years of strong growth, continuing growth for those service lines. Another good story in 2015. When we took our first step into player support with Alchemic Dream and Fred Ahrens. Interestingly enough, I think just within a few days before, I think we made the announcement, one of our clients in Japan for other services approached us for player support. And at the time, without Alchemic Dream, we probably wouldn't have been able to handle it too well. But Andrew, put me on the phone with Fred Ahrens and said, "Hey, this guy knows player support," and I hopped on a Skype call with him and got a 30-minute crash course. Went in and talked to the client about it, and we ended up winning the work. And I think for next year, that client will actually be one of the service line's largest clients. So it's a cool story. It's kind of like Andrew Tosh's as well, earlier on. And then again in 2016 with Synthesis, with Max joining the team, really consolidated the offering in Japan for translation and audio services, again building credibility in front of our clients and allowing us to provide a wider range of services. And also with the audio made us decide to better control the business, improve our utilization, and we went and took on our own space for recording as well for internal staff. And that takes us to 2017 has been another great year, as you can see from some of the percentages up there. On top of the existing 4 service lines that we had, we also brought on a functional testing team, taking us to 5 service lines. And in the summer, we were cramming about 120 people into a 100-person space before we made a move to a larger space of about 300 seats. That's already 200 seats full right now, and looking to be very well utilized into next year as well, and getting a little worried about further future expansion. So yeah, How's that sound, Nicolas?
That sounds perfect.
Great. Thank you.
So, been leveraging companies, leveraging people. In all of this, I mean, we need to be conscious that the group and Keywords has changed as well. And how I've been managing that change somehow, and trying to hear. I mean, we want to hear the Tommy story, since Tommy, on the top of being the colorful addition to the team today, is
thank you.
Is also our localization testing service line director. So Tommy, you've been around since the beginning of the story, so tell us about your journey and the Keywords journey so far.
Wonderful, thank you. Hi everyone. Today I just want to talk a little bit about the evolution of Keywords as an organization from my perspective as a Keywords lifer. How things have changed over the years and what opportunities our growth presents to us and our teams at Keywords. I essentially took a look back to when I started at Keywords as a little tester back in 2006, 11 years ago, and compared it to where we are today. And oh boy, this has been quite a journey. While I could probably speak about this for hours today, I spare you the details, or I was even thinking about writing a book about it, I would like to focus on a couple of key areas today. And for me, the 4 key areas that define Keywords as an organization, it's our people, our clients, our processes, and our systems. As a business, we grew immensely. We started with like around 20 clients back then, back in the days, and are now over 400 clients in our pool. And we're now working with client partners from all sectors of the video games industry. And the great thing is that with many of them, we moved from some ad hoc order taker that discusses business on a project-by-project basis to strategic partners that are committed to each other's success. And the same holds true to our processes. Our processes evolved quite significantly over time. We consolidated them and we complemented them with continuous improvement along the way. And the beauty of it all is that we now have the unique opportunity where former competitors can sit together on a table and discuss and synergize real industry best practices. And the same holds true for our systems. I spare you the details of our cute, small, local setups of the past and just tell you a little bit about today. Today, we are making better use of technology in the way we communicate and in the way we collaborate. And we're moving more and more towards IT heaven or the cloud. And I kept the best for last, and that's our people. We're now 5,000 Keywordians strong. We're working together across 39 studios, across 7 service lines. And we're united by our passion for games, quality, and working together as a team. And with this growth, we enabled various opportunities for our talent to grow. And I'm a good example for this. I started back in 2006 as a German tester, and through the journey of Keywords, I had the chance to level up from tester to test lead to project manager to QA manager to now being in charge of localization testing worldwide. And we recognize this need for opportunities for our talent as well, and we keep building and growing them as we go forward. And it's our evolving organizational design that presents new opportunities within our business and operations support functions. It's our increased efforts and thoughts that we put into career mapping and talent retention through the likes of a level up program that we're developing. It's the investments that we're continuing to make in our learning and development through training, mentoring, and coaching. And it's also now the chance that our talent can explore careers in new areas of the industry in different service lines as well. And last but not least, when we have new openings, we like to think about our internal talent first and give them priority access to applying for the job that is there.
Thank you very much. Andrew, over to you to wrap it up.
Right. Thanks very much, guys. So hopefully through this section we've heard that our approach to integrating businesses is actually, while we learn from each one and we have some sort of standard approaches, ultimately these are tailored to each of the individual business and their specific circumstances. We also have heard that we have a strong understanding and approach to the whole integration process that starts actually from even before we acquire these businesses. And that we have consistently demonstrated that the Keywords culture supports both the rapid and really fundamentally meaningful integration of these businesses. So at that point, I'm going to pause again for another 5 minutes of questions. So if anybody's got questions for me, for Nicolas, or for any of our colleagues, please fire away. Wow, guys, you've silenced everybody.
Is that a good sign?
I think it is. Thank you very much.
All right, thank you very much. And again, thank you all for being here. My name is Michael Wallen. I'm the Global Business Development Director for Keywords. I'm joined here on stage by David Broderick, the Chief Financial Officer, and Fabio Minazzi, the Global Service Line Director for Localization. And we are talking capturing the cross-selling opportunities, really where the rubber meets the road for Keywords. You've heard all about how we go about acquiring talent, how we plan on using it, how we implement the talent. Now let's talk about what we do with it. And let's see if I can figure this out here. I did, look at that. Okay. Cross-selling really is the bedrock of Keywords. It is not only from a sales strategy standpoint, but from a foundational business philosophy. We have built Keywords to cross-sell. The ability to provide multiple service lines and services to the same client, creating a one-stop shop of development services to a particular client is the Keywords way, is what Keywords is all about. At the core of our cross-selling strategy is the understanding that along the game development cycle, anywhere along the cycle there is an opportunity to enter the cycle itself. From end to end, there's opportunities to provide quality, best practices solutions that you've heard about already on this stage from multiple service lines. Many of these services are necessarily only at the time in the development cycle that it is required. And then to maintain that service by our clients, it becomes very costly. So they turn to Keywords. Right now, with the pace of games and the fragmentation that's out there in even our marketplace, content is constantly being created, whether it's mods, ports, DLC content. The opportunity to enter this development cycle now no longer follows traditional gaming, the old game development model, which is 18, 24-month cycle. You can enter this at any time with the service offering that Keywords has. Our breadth allows us to enter it at pre-production stage with art, concept art, player research, and our data sciences. In our early stage game development, art and engineering again, as well as audio support. Late stage game development, we offer localization services, linguistic testing, functional testing, again, art services, and even marketing art. At launch, we do beta testing, marketing art, trailers. In our ongoing live operations support, we do player support and community management. And finally, the new content, this DLC area there, where it literally brings it back almost to begin again, we start to cycle back over with art and engineering. Depending on the size of the client, the decision makers at each point could be different and could be different for each service line. Maintaining the relationships with these decision makers is key to successfully supporting these clients. As the products grow larger in games and as the platforms emerge, additional needs continue to present themselves. And the job to anticipate, prepare for these needs, and the changes that they create fall on the leadership of Keywords. To get a better look at how we've structured our team to handle and anticipate these changes, I'd like to introduce David Broderick.
If you've heard the group here today so far, I mean, we're obviously becoming a strategic partner, a trusted partner. As Mike alluded to in the earlier slide, the cross-sell to these companies is a huge opportunity. To do that, we need a firm foundation on the house that can deliver consistently for those clients on a global stage. And how we do that is primarily through our senior management team. And we give them the tools and we give them the structures to deliver on that basis. So our service lines are run on a global basis. You can see we've kind of run across the 7 service lines here. And they're supported to run their operations globally. They're supported by our 3 regional managing directors. The regions are quite specific. It's EMEA, it's Asia Pac, and it's the Americas. So they work hand in glove. They look to deliver in the regions. They look to deliver for the service lines, and ultimately satisfy our clients. Sales equally, again, run on a group basis, but segregated on a regional basis across the three principal sectors. Again, headed by Mike and his team. They will sell across all the services. They're not specific that somebody is exclusively selling art or particular service. They're selling to the region, and they're selling the full complement of services that Keywords has to offer. So our structures, our processes, our management, and our people are built in such a way to help drive this machine, deliver the process, deliver for our clients. And another aspect of this from a procedural perspective is the master service agreements that we enter into with our clients. So all of this comes together. It helps maximize the cross-sell opportunity. It helps us to deliver, and it helps give us the platform. I think if you looked at this structure probably 12 months ago, we continue to add to it. We brought in IT director in Gary Merrigan, our global HR director in Gerry Cleary, and equal to the people, we continue to kind of invest in the systems for the kind of ancillary or related group services. So HR, IT, marketing are all areas that we've continued to put money into, we've continued to progress. And like I said, it's all about putting the structures there, the platform there, for us to go and deliver out on the global stage. I suppose testament to this is obviously the increase that we've seen year on year. Again, the breadth of offering, the range, our own physical size in the space, our global reach, mean that we're again back to this position of a trusted, loyal, strategic partner for our clients. On that basis, they're prepared to entrust us with more and more services that they want us to action. So validation of this is clearly of our 400 or 500 clients that we have, is the fact that every year and up until the half year at 17, we're seeing a steady progressive progression as they look to give us more and more services around the globe. And we continue to deliver for them and do it in an efficient and consistent manner. I suppose what's key to this, and I don't know who referenced it there earlier, is it means the relationship is deep, the dialogue is deep. We have a better visibility in terms of what they're doing, what's in their pipeline, how we can continue to service them. And I suppose that's key when you look at the fact that those clients therefore make up a large proportion of our total overall revenues. So that gives us a good visibility about what's coming down the line, how we can structure our resources and run the business as efficiently as possible. I suppose to further underline the kind of metrics that you're seeing here, a bit similar to Nicolas' slides there on integration, there's no simple one way of doing the cross-sell. So to that end, we have Fabio, who will talk you through a specific case study, and likewise Mike has a couple of case studies as well that he can walk you through. So Fabio.
Okay, as we understood, I am the translation localization guy here. So I'll take you through a couple of ideas that may be new to you, depending on your proficiency specifically in video games, for you to understand what it means to do cross-selling inside the same service line, for example, which is one of the things that we are implementing. What is a video game? Video game is a creative, interactive form of entertainment that works on computers, so digital entertainment. So digital entertainment integrates a number of different media in a single product that you interact with, and these are creative media. So art, there is audio, and there is graphics, as well as code. Of course, one very important element there is text. Text is always present. You can imagine almost every video game has a text inside. So what happens in this world? The complexity is increasing. You can imagine how games are developed today with a faster pace of development, faster pace of deployment, iterative cycles that you go through to go from what we used to know as a release game that was then left die in their publishing cycle to actually recycling of the contents, because not only it's a big investment to make a game from the technological point of view, but it's also a big investment from the creative point of view. So the growth of the complexity comes along with the growth of the IP value, the intellectual property value. This is where our translators have to work. So it's an environment where translators in their home or in our offices, they are faced with a number of strings with different entities that need at one point to be somehow mounted together. So the process is still quite new if you consider that it's a young industry. And you can imagine in a few years, everything will be very integrated. So we did the first step towards that integration by acquiring a company called the Xlock. It's a major content management system dedicated for video games. What it does basically helps you versioning all the strings and all the content you put in a video game, and allows teams to work together, translators, creative writers, testers, all to work and keep control of the assets. With this system, basically, we can allow our translators to work better, but also our clients to work better, and it allows us to add value to our clients. So typically, a translation company works with a text which is exported. Now we are able to do an upstream integration, go there and talk with them also about their processes, provide them consultancy on how to best do their production over a number of languages, provide them a better, better process, as well as allows us to do investments and create a better product. So Xlock itself will grow to a better product, therefore adding value to a larger number of players in the industry. So I think we can probably say that we are adding value to the overall industry, not only to ourselves.
Thank you, Fabio. For a more traditional example of cross-selling, I wanted to talk about a leading mobile game publisher developer that we're currently working with. This is a very high-profile, industry-leading mobile company. It's a shame. I'd love to tell you who it is. We started providing localization services for them in 2014, 11 languages. Just got started with them, generated revenue of $1 million. Started as a vendor for them in 2014. By 2016, we were adding linguistic testing, and we created a dedicated internal team in Europe and Asia to manage up to 200 external linguists, and we grew the revenue to $5 million. By 2017, we're starting to moving from vendor to kind of selected vendor to really trusted partner now. We're moving into an area where, as a benefit of the Xlock acquisition that Fabio was talking about, we're able to provide them with a streamlined, I have to get this right, streamlined globalization process. That's all I can tell you about that right now. We added art service, both game art and marketing art services. We also provided them a custom hardware and network connection for this client, providing them not only the talent for the team for player support, but exact technical specs for their machines for the player support services, something that we hadn't done before. And on top of that, to add emphasis to this trusted partnership and to add emphasis to the level of engagement, we embedded what we call a client, senior client success specialist in our client's main office. Revenues expected to be $11 million this year, 11 million euro, this year. This is a significant engagement. Another example, another traditional example, but now we're going to the online gaming space, online game publisher developer. We started doing artwork for them in 2015. Game art for their MMORPG, revenues of $100,000, just getting started working with them. By 2016, we added services of functional testing, linguistic testing, and localization, further embedding Keywords as a trusted, valued partner. They start coming to us, asking us questions, asking us for the solutions. During that year, we integrated a functional testing solution created utilizing 3 separate Keywords studios and locations around the world to provide them complete player coverage, which was something very significant and very specific to this client. They wanted 24-hour player coverage. The volumes created that year were €700,000. By 2017, our standing with the client had expanded to include player support. Starting with Chinese support, we moved into English, and ultimately leading to a community management solution for them that was designed by Keywords and recommended to the client by Keywords. For keeping score, that brings our total to 5 service lines for this client as well, generating revenue over $1 million in 2017. Our forecast for 2018 is very strong. Now, we've had an example from Fabio of an inter-service line cross-sell. I just gave you 2 examples of what we would call traditional cross-selling opportunities, where we take existing services, introduce them to a client with the Keywords value, with the Keywords reputation. We acquire that. This is a different model. This is a different beast. This is something only Keywords can do. This is an example of a combination of cross-selling. This is a long-standing console multinational client of Keywords that dates back to 2009. I'll go through this quickly because it's the last slide here. In 2009, we were just doing localization service with them. As you can see, we moved through. We added additional services, growing the existing localization services, and then in 2014 we added art. We grew the localization service up to that point, and then by acquisition we started adding services. This is a combination of organic cross-selling and acquisitional cross-selling, something that you just can't do if you don't build a group like we have. It's given us a strategic level of engagement with the client that I don't think other companies really experience. It's increased our position and our value with the client. As you can see just by the numbers there, the increased growth from 2014 to present is exponential. 600% growth in a combined cross-selling situation. So cross-selling isn't static. Cross-selling can be inter-service line, it can be cross-service lines, it can be organic, and it can be acquisitioned. But for Keywords, we've created the opportunity for us to do all of the above. So at this point, I'd like to bring back Mr. Andrew Day.
Thanks, Mike. Right, so this is the wrap-up for that section. So hopefully we've demonstrated the fact that we not only talk about cross-selling, but we get on and do it, and that our clients are welcoming it. They keep asking us for more services, so that's proof positive that it's working for us. The continuous nature of video game development also leads itself very nicely to cross-selling, because this very fast pace of producing content really lends itself to having a supplier that can do all services on fairly small packets of content, but at a very, very fast pace. The other thing that I hope we've helped you understand is how we've built our organization specifically to do this. This is the entire strategy of Keywords, to add all of these service capabilities and to bring them to bear on individual large-scale clients, so that we can provide them more value, and that we've basically built our organization chart to facilitate this. So hopefully you've seen that the approach is clearly working, but I'm willing to sit here and take any questions from you to probe deeper on that on the whole cross-selling approach that we have.
So quick question, when you make an acquisition, how do you incentivize and drive that cross-selling behavior for a studio who traditionally has never done that before?
That's a good question. One of the first people into an acquisition after we've done it is actually Mike and his team of salespeople. So I'll let Mike speak in a minute, but very often these companies don't actually have a sales force. So they've grown perhaps without needing one, with word of mouth. They've got good delivery reputation, and also they don't necessarily have the mindset of trying to achieve maximum growth like we do. So they haven't invested in the sales force. So that's part of the answer, I think. They welcome that addition, and most people in this industry, and certainly the ones that we ask to come and join us, are actually hungry to try and make something more of themselves. As we heard earlier from Max at Synthesis, they felt as if they had hit a ceiling. We help them remove that ceiling, and part of that is all about cross-selling and sharing experiences. I think that's another big part of everybody that's in Keywords is passionate about what they do, and a large part of what they do is supporting video games. And so they're very, very open to exchanging ideas and opportunities. Sorry, I was going to let you speak, but I did it for you.
That's all I have to say about that.
There's another question here. Oh, sorry, one at the back there, sorry.
Yes, I was just wondering, I mean, you talk about the video game industry and that sector which you specialise in, but do you ever get the opportunity, or do your clients ever ask you about whether you would take on related work in similar sectors, whether it's in TV or just IT services generally, or how do you feel about opportunities like that developing in the future?
Yeah, no, we do actually. So our focus as a business, and Mike's team, for instance, and in the business development world, they focus exclusively on video games. So we're not trying to hunt business outside of the video game space. But business does come to us that is from, I would say, neighboring sectors. So we do, within our business, whether it's in art or whether it's in localization or even player support, for instance, we will bleed across, as I call it, into some neighboring areas where our skill sets are very well adapted to the problems they're trying to solve. But those engagements tend to come from a kind of pull. So these clients find us, learn about our services and our expertise in this very interactive content space that we occupy. And so we get dragged into all sorts of things, whether it's retail applications, whether it's experiences in museums for helping children learn or whatever. And we willingly do that because it's all building on our expertise.
Yeah, you've got a global sales team and 39 studios. Do all sales go through the global sales team, or does each studio also do its own sales in its own right?
You need to come to our sales meeting on Tuesday. I'd like you to ask that question again. No, actually, it's an excellent question, and that is part of what we deal with right when we first start working on any integration situation with a new client. So the easy answer is no, all sales don't go through the global sales team. The way that Keywords is built, Keywords' reputation, we see significant amount of organic growth from the relationships that our production teams and our delivery teams have developed with clients. It is not uncommon at all. In fact, we budget it. We know that it's out there. Those relationships are what and why people come back to Keywords. So there's a certain amount of business that we know is going to come outside of the sales team. The business that does come through the sales team, when we acquire someone and we are integrating with them, we do our very best to find the synergies between the sales teams. We actually operate in 3 regions. David was mentioning it. We follow the regions of our development and our publishing group, or excuse me, our production group in Asia, North America, South America, and Europe. So we have sales teams in each of those 3 areas. We bring the business into the service lines. Each service line has a service line director. It's the service line's opportunity to figure out where that business best fits. For us, from a sales standpoint, when we get an opportunity to bring new salespeople in by way of acquisition, part of it is to take them through the exact same process that Gerry was talking about being part of Keywords, understanding what it is to be a Keywordian, what does it mean to understand our philosophy for cross-selling, and then do they fit, do they understand what we're trying to do, and then how do we take that forward?
Thanks.
One more question here. Yeah.
I had 2 really.
2 more questions here.
Well, first is with so many divisions. All right, thank you. Thank you. With so many divisions, how are we ensuring that the message is consistent and there's not a case of overpromise, which the sales guys obviously are so good at, and under delivery, number 1. And another thing is specifically to you is really how cost efficient, because you're obviously knowing how many clients we are kind of losing and how many pitches we are losing. How cost efficient are we? And how important is that cost when we are bidding for these new projects? Not a sensible question?
Yep, no.
Well, I'll handle the first part. You handle the second part. The first part's really easy. Now, first of all, a good question in terms of how does the sales team stay current? How does the sales team stay I want to say, cohesive, and how do we maintain at the growth rate that we're growing? Well, the key in everything at Keywords is communication. If I talk to this guy once a week, well, at least once a week. The ability to communicate with the right people inside of Keywords is paramount. We're not a deep structure. We are. David showed you the org chart. We're very, we're built for speed. I guess that's a good way of putting it. We're built for speed. So the sales team, we're constantly in communication. But beyond that, the sales team has full right and opportunity to be in touch with and in communication with the service lines. We don't want to oversell, because I'll tell you what will kill us. What will kill us is if we promise something we can't do. We're not going to do that. You can tell by the quality of the people that have been up here that the last thing that we want to do is do something to damage our reputation. And the last thing I'm going to have is someone on my team that's going to do that as well. And there isn't a person on my team that thinks like that. But our reputation is all we have. And so that's the number one approach that we take towards it. So do we want to go out and get some giant sell that, well, okay, to be fair, have I called a few of these service line directors up going, man, is there any way we can do this? I've got this great big deal. But if they say no, it's a no, because you won't come back to me if I say yes and I can't do it. And not only that, you're going to tell 5, 6, 7 other people what I did. And we are a huge industry. We're $100 billion industry, but we're really small. Everyone knows everyone. We wouldn't get away with that for long. And now you get the hard part.
Yes, I mean, the answer is we're never as effective as I would like to be. So, we've been on a journey as far as sales is concerned. I think, Mike, your team now is it's more than that, isn't it? About 15, 16, 17, I don't know. It's quite it's quite a few people. But we do measure it all. Mike measures it. Mike reports to the board ultimately in terms of how efficient his salespeople are, what the cost of sales are. What I can say is that obviously we're out there, we're looking at other businesses like us, and I'm very happy with how cost effective we are, not only in the sales side of the business, but in operations generally. And I think that's reflected ultimately in the net margins that we generate from this business.
My name is Jaime Jimenez. I'm the Chief Customer Officer of Keywords Studios. I joined the company recently, a year and a half. I was acquired by by Andrew individually as a one-man band. Before Keywords, I was Vice President International Development Services in Electronic Arts, from one of the biggest developers and publishers in the world. In fact, some of you may remember me from 3 years ago when I came here invited by Andrew. Thank you very much. That's great. Does it work? Yes, it works. And I just thinking back about then when Andrew told me the amount of fun that I was likely to have in this company and the amount of innovation and new the possibility to disrupt the business that we were going to have, I couldn't quite believe him. But I'm a believer now. Andrew, this is like awesome. Thank you very much for that, because it's worked out incredibly well. Incredibly well. I'm not alone here, fortunately for you guys. I've got here Fred Stockton, who you met before. He's the serious guy that made that wonderful pitch about selling his company. And Matt Bendra, Shokul. Almost there. Oh, yeah, okay. Shokul, who is the CEO of Lakshya, one of our premier art studios based out of India, and they will be joining me in explaining strategic partnerships later. So, okay, that's 2 minutes gone. That's great. I'm going to talk to you about a few things. If you guys are familiar with the industry, which I'm sure you are, because this is the games industry, we're in the middle of a very big transformation. The business model is transforming. We're going from packaged goods model, very classic, we got a product here, and we're going to a digital distribution model where we are selling software as a service, or our clients are selling software as a service. Now, this is great for everybody. It's great for them. The margins are improving. It's great for us because we have more and more work due to this business model change. It's great for the players because the players get big, huge, immersive experiences and huge investment in creativity from the developers and the publishers. But there are some things that are happening in the background as a result of this. There is an operations change in the way that the developers are doing business that is basically caused by this business model change. So I'm going to draw your attention here to, central power, central sales on the one hand. This is actually facilitating something that did not exist 10 years before. This is central buying. Central buying is excellent for Keywords because it allows us to have something that I will talk about later, strategic partnerships. We get to talk with people that are empowered and that are senior enough to talk about multi-year, multidisciplinary engagements where we are much better integrated into the company pipeline than we ever were before. I also want to talk to you about, innovation. Our customers out there, our clients out there are more and more interested in innovation. They have to deal with a lot of complexity in the sense that, video games are at the absolute edge of technology and life is changing on them every minute. And dealing with that requires every single brain in the company. So managing, a 4,000 strong QA team is not one of their priorities anymore. They would like somebody else to do that for them. And that's usually us. Higher margins are nice for everybody, basically. And then there is the concept of, one-stop shop and distributed development. 10 years ago, distributed development was something that some companies were doing. Today is an absolute reality. If you saw all the guys that are here, and by the way, I'm Spanish. Hola, ¿qué tal? Perdonad. I would have liked to say hello in Spanish. I forgot. The French guy got me there. You've heard, 6 nationalities. You're about to hear from 7th nationality here. That's what Keywords looks like. It's an incredibly exciting place to work. Anyway, so we do have that diversity and we do provide that one-stop shop, and I think we are uniquely positioned to take advantage of this change that is happening in the industry. So let's see what is the impact of this change in the outsourcing strategy of our customers. If we could go, sorry, it's me. Right, so, wow, it worked. So this is, I tried to put all the steps. There's one step missing here, which is the way that outsourcing started, say 10 years ago, which was purely transactional. It's what I call a one-night stand. I meet you, I give you a project, you do well or not too well. It doesn't really matter. That's the end of a relationship. And then the next time you're up against the whole field of competitors exactly the same way that you were 3 months before. Well, that is changing very quickly. And I'm proud to say that Keywords has led the way in this change. Dedicated teams was the very first change that I saw. And I saw that very, very closely. The fact that that Keywords at the time was able to put together teams that were dedicated to a particular client or a particular IP that were fully immersed of a culture of the client and fully immersed in the IP that they were working on was a huge differentiating factor at the time. This very quickly evolved into the spin-off production centers. Keywords has already have 2 instances where a big AAA client has come and say, hey, we love our production center, but we just don't have the bandwidth to manage that complexity. Could you take the whole team? Could you take the whole facility, including all the hardware and the building, and just manage it for us and deliver the services? And that has been great for the clients. It's been great for us because it's given us phenomenal talent that is coming from the client side, and it's allowed us to actually service other clients in a very, very effective way. And one of the big things that I want to talk about today is this strategic partnership model, which I know actually, is the next step in outsourcing. What is a strategic partnership model? Well, it basically means, if that wasn't one-night stand, that is a marriage, right? This is where you have to plan for the long term, where you have your kids, where you're very, very, very integrated. You're very, very, very integrated with the customer, and you have huge dependencies in terms of technology, and you're integrated in the pipeline, so you're using exactly the same tech stack as the client has. These are very, very, very close relationships that are incredibly good for the customers because, again, it reduces the amount of complexity that they need to manage. But also they are incredibly good for us because it allows us to not just being able to invest in long-term innovation roadmaps that are usually multi-year, but also live with us the benefit of all that innovation. I mean, we already learn a lot about how all the things that we do are being done because we work with most of the industry, but now we get this opportunity to actually learn how our customers, how our clients are doing these same things. And this is knowledge and technology that then we leverage in, with other clients to basically service the industry, which is the vision that Andrew is pursuing. So I think that as a company, Keywords is uniquely positioned to take advantage of this evolution of outsourcing and that previous change that I spoke about. And if we go, okay, yes, it's me again. If we go to the next stage, it's our global services platform. And I'm sure you've heard Andrew and David talk about this before, but this is what we're building. We are building a solution that is able to service any game developer, any publisher out there, the whole of the games industry, and trying to put together as many services as we can. And these are the 4 pillars of our global services platform. On the one hand, we provide the scale, and we provide the scale in a really big way. We do that across continents, across time zones, across countries, across disciplines. We do end-to-end, which basically means that we are able to provide all the services, and you'll hear a little bit more about this from Fred and Manbendra, but it's not just in the same service line. We do end-to-end horizontally across all service lines. These days, we are delivering 7 services. It may be 8 or 9, in the near future. But we are the solution for our customers' needs today. I talk a little bit about innovation. I'm very, very passionate about this. You will hear a business case about innovation in a few minutes. And then this is very, very important too. And it's a result of that transformation that I spoke about. The fact that the digital transformation is creating intellectual properties that are not fire and forget, but software as a service, means that these intellectual properties, these games, are with us for years, okay? And that basically means that the investment that these publishers and developers are having to do to create these IPs has multiplied many, many times. These bets are very big bets. So you cannot really hedge your bets from the creative perspective. It's basically you're either going to get it right or not, but you definitely can hedge your bets from the operations perspective. And we are one of the best ways to hedging that bet that exists out there. And our customers are coming to us to ensure that they can manage their own risk from the financial perspective, but they can also manage their own risk from the operations perspective. And that is a very, very important component of our offering today. So without much more ado, I'm going to hand over to Fred and Manbendra, who are going to talk about this case study, multi-studio end-to-end outsourcing of game art. All yours.
Great. Could we have our slide, please?
Yes, of course, yes.
Thank you.
There you are.
Hello again. It's great to be back. I'm going to pick the story up where I left you last. If you remember, I was an owner that sold his business and became part of the Keywords family. Well, it wasn't long after that Andrew approached me and said, would you please be the service line manager for art, and let's go build out just a tremendous art business. Well, I want to back up just a second. Before we came on board, my friend here was the first art company, Laksha, to come on board, and they came on board literally 3 years ago. So we're talking about a 3-year history. So 3 years ago, Keywords was not in the art business. 3 years from now, we're here. Well, it's been a total of 6 acquisitions. And today, we are the first art company in the video game industry to have a worldwide footprint. We have a total of 14 studios and 2 support offices that cover all the major video game markets in the world. We have a presence in London. We have a presence in Quebec. We have a presence on the west coast of the United States. We have a presence in Tokyo. We have a presence in Beijing and Shanghai and Singapore. And we have a presence in India. So we now completely cover that. Why does that matter? Well, first of all, we can provide worldwide client service and time zone service to our clients, no matter where they're located. In the art business, it's very important to also be able to provide art that is culturally appropriate. And so having artists in each of these countries, each of these areas, is very important to giving the breadth of the kind of services. It's not just making a sword. Often it's making a sword that fits the Japanese market or the Chinese market or the American market. We have that now. As I mentioned earlier, we have a complete level of services. So besides having what is without a doubt the best concept art house in the world, located in Quebec City, we have tremendous production facilities in China, in India, in the United States, and in London. All of that gives us extremely deep and broad experience. Another point I'd like to make is I mentioned earlier that how important it was to retain our employees. Well, each of the companies in our group started somewhere between the year 2000, which in this space is very early, and the year 2007. We have retained a majority of all the employees that started and worked with those companies. So we have literally thousands of years of experience in our networks that we can share with our clients. And with that, we are one of the most powerful art production companies in the video game industry. As Jaime mentioned, the beauty of that is what we've done quickly has been able to add a broader range of services. We've been able to come to our clients and have far more scale. If one of us has a shortage of scale or one of our teams doesn't have enough, we've been able to add additional scale simply by calling on the teams that we brought together. And we've very much started down the path of creating deeper partnerships. One of the things that every company brought to our group was a very strong relationship with a group of customers. Well, now we have the group of customers built from all 6 of those companies. And as we brought them together, we learned that there was very little overlap. In fact, one of the strengths of the company's success was that they were able to form strong partnerships with a finite group of clients. But now we have all of those clients in the group. We're seeing, and there's a huge trend coming to where our clients are, as Jaime mentioned, not just asking us to be production partners, not just to be a vendor, but to be a strategic partner, starting all the way back with design and concepting, all the way through to literally getting the game ready to go out the door from an art perspective. What I'd like to do now is give you 3 examples. I'll give you one, and then Manvender's going to give you a couple of examples of real-life examples that have happened in our group. The first one is a fairly current one, and it's a VR company. Virtual reality company. Just for context, virtual reality companies, many of them are funded with high-tech money, high expectation investment money, and many of them are brand new companies. They come with lots of capital. They come with very entrepreneurial owners and often very technically savvy owners, and very little production capacity. So they're perfect partners for us. This particular partner came to us and initially contracted us for design and concepting services to kind of help understand what they wanted to create, how they wanted to create it, and along that path also what they could create that would fit into the technology. Well, they used our Volta studio in Quebec City for those services. Volta then being the lead studio, and we use a lead studio concept so that we're not trying to sell multiple studios to our clients. Then brought in our Mindwalk studio in Beijing to provide environmental art production based on the designs that were done by our Volta studio. Then they wanted to do some pretty highly technical things with those assets, so they brought our Liquid Development Studio in Portland, Oregon to do visual effects, to do scripting, and also to do lighting of those assets in their virtual environment. So very quickly, we brought the capacity and the capabilities of 3 studios to bear to a single client. Manvender's got a couple other stories to share with you.
Yeah, so at times, like Fred said, they come up with a need for multiple services that they need. But at times they come up with a problem, I shouldn't be calling it a problem, a need that besides just multiple services, they also need capacity, they also need a scale, which on their own, obviously they can't. And if they need to go out to 4, 5, 6 different studios, that's a big headache for them. And it's like almost like a migraine. When you get up in the morning, you're like, oh my God, I'll have to deal with these 5 guys again. So they actually have to deal with different services, and each of them offering them different size of teams, multiple teams. So that's another solution that we have been able to provide, where we say that, okay, you come to us, we have a solution for you, where we'll do your work, your project from start to end, which is like concept to completion, and we'll also provide you scale. So another example of one of the projects that we did was, again, a very large AAA developer from the US. So they had a same thing, like I said. They had different services, different things that they needed, and they needed scale. So at peak, they needed more than 75 people to be working on their project. So we brought in 4 different studios. We brought in Volta, we brought in Liquid, Lakshya, and Mindwalk together. We provided them concepts, we provided them modeling, animation, lighting, everything. So and all this we were able to provide to them simply because internally we have created solutions, we have created processes, structures where at the back end all studios work seamlessly. And as far as the client is concerned, he doesn't have to deal with 5 different studios. He doesn't have to deal with 5 different project managers. He deals with what Fred mentioned as the lead studio. And that's the comfort level he has. I have a relationship with this one studio and I work with them, and how they do what they do at the back end, I don't need to worry about. I think that is something which has really brought a lot of value to on the table that we have brought for the client, and that's something that they appreciate. And also along with this, I think when we talk about providing the solutions, a very important part of this whole exercise is the fact that are we just a minion, just a vendor? So we have basically moved on from being just a minion who's been given a task and you go ahead and do it, to actually sitting on the round table with the knights. And that's basically because now we're in a position where we sit with them on the table and we talk to them about their problems, and we ask them about what is it that they want, what are the issues, what are the things that they are facing, what are the challenges, what are the limitations, and we work up solutions for them. And those solutions are things which separate us and the value that we have to provide to them from everybody else who's out there. And that is something which I think is really valued by the customers. And just as an example of this, of what we did here, we had this a very large, again, Japanese client, and they had a problem. They had a very serious problem that they had to make for their game to look good and look complete, 250 characters. Now, the budget they had for that was just about what they could have done, about 100 characters. Now, yes, obviously, they really want all the 250, but they can't do it. What do they do? So they have an option. They say, okay, now let's just make 100 characters, let's forget about the 250. The game will not really look the way we want it to, we live with it. That's one option that they have. Second option, and that's the option they took, is that they come to people like us and the knights in the shining armors, where they say, you know what, we have a problem. We need to do this. We really want the game to succeed. We really want the game to look great, but we don't really have the budgets to do that. Now, obviously, that is where the expertise and the skills that we have built within the organization, within the art studios, comes into play. Because of the fact that the teams that we have built have been around for years and years and years. I mean, they've been in the games industry 15 years, 20 years, 25 years. So they have seen a lot of action. They know exactly what works, what doesn't work. And in this particular case, when our senior team, art directors and tech directors, they got on the table, they worked with the client, they heard what they had, they saw what the problem was, they saw what their game is. They figured out that, the way the game is made, the way the game is, there are possibilities of creating a solution where they can create the same 250 characters with the budget of just 100 characters. And that, I think, is something which was at that point in time the greatest value that they could have asked for. And that is really something which we as a solution provider have ensured that we are no longer just vendors for them. We are creating solutions for them. We are telling them that, okay, there are better ways of doing this, and that we can do only because we can understand what their product is. It's next to impossible for regular developers to do that, because they understand one side of things, but they may understand a few things, but they don't understand the whole gamut of things which are actually available out there. And that's the value that these tech guys that we had, the art directors, they understood the game. They had the ability to understand what the game is and find the possibilities there. So that, I think, is again something which is of great value. And the other important thing is that when we are talking about becoming advisors, becoming partners, one very important thing is innovations, which one constantly has to do. And I guess I'll hand it over back to you, Jaime, to take it forward from there.
Right, so we're gonna go over time. I'm gonna blame you guys. Yeah. So strategic partnerships. Everything that you've heard in this section is a strategic partnership, but it's not only there. You have been hearing cases from all my colleagues in Keywords, and pretty much every single one of those relationships is a strategic partnership where we are bringing value that goes way beyond the pure transaction and goes into innovation and solutions like the one that Mandendra has explained, and you have time later on to ask him exactly how he did that, because it's a really interesting story. Anyway, this is an innovation business case. It's a very interesting one. It was very interesting for me because, having the best job in the company, which is putting together all these services, all this creativity, I was very, very lucky to play with player research here, with testing, and actually VMC is going to be there as an accelerator. And actually, that is you, Graham, right? Could you take a bow? Come on, stand up. Oh, come on, don't be shy. And Matt, who will not take a bow either, is also sitting out there. He's responsible. And between these two guys and a few others, they created this incredibly creative solution where one of our clients wanted to go beyond the product and into the player. So not only did they want your classic QA services where you understand where the mistakes, where the errors are, where the bugs are, but they also wanted to know what the player behavior was going to look like. And what we put together here is using our player network that is going to be hugely accelerated by the global beta testing network from VMC to be able to beta test a lot of the products that we were talking about before launch, way before launch, and understand what were the risk profile from the operations perspective, and on the other hand, what was the likelihood of success of the features that they were putting in. So you don't need to read all this jargon. It's there just to impress you. You can ask me later how this was done, but it was very, very well received, and it's a very important piece of innovation that allows us to do many things. Because when you are talking to your customer about their core business, how good their game is and how successful it's going to be out there, you get the opportunity to enter in conversations at a very senior level that open all sorts of possibilities, and I'm going to say those words again: strategic partnerships, innovation-driven, multi-year, multidisciplinary, basically what we are building our company for. A lot of this is very obvious. It does further differentiate Keywords. All this revenue is very, very predictable. It's high margin. The added value to the customer and to us is mind-blowing. I talked about innovation before. It allows us to play with data science, because one of the beautiful things about this is as we build our data warehouse about where the errors are and basically the player behaviors, we can start to use our analytics teams to figure out what is likely to happen in the future. And again, VMC with their embedded technical services are going to help us get beyond where we are today in analytics. So that gives me a very good excuse to go into the last slide. You can rest, which is basically, finally talking about the VMC acquisition. I was so pleased about this. Thank you very much for the early Christmas present, Andrew. This is about to become one of my favorite toys. The sheer scale, and I take you back to the global services platform, the sheer scale of DMC operations, its West Coast presence are essential for our clients on the West Coast, and a lot of our clients are on the West Coast. Not only that, they have very diverse talent that is going to help us with analytics, and of course the impact that they will have in player support is tremendous. I gave you an example just before of what their global beta testing network is going to do for us. It's going to accelerate a project that was going to take us a year and a half into basically tomorrow. which is going to be great news for our customer, and it's going to be great news for us. And on top of that, we get some beautiful divisions like the embedded technical services that are basically something that are going to accelerate our capability to create those strategic partnerships that I've been talking about, and accelerate that into infinity, basically. I am now out of time, and I think I have bored you enough, and I'm going to hand it over back to Andrew for closing.
Right. So I'm just going to talk generally about the summary from today. We've tried to be fairly ambitious and to field a whole bunch of keywords people. As you can see, we didn't quite manage the timing element of that. But hopefully what you've got from us today, in addition to hearing the story about how we're adding value at all stages of the development of keywords, what I hope you've also got is a sense of the breadth and depth and quality of the management team that is looking after your investment on a day-to-day basis. So if that's all we've achieved is to field these guys for you, then it's a big tick as far as I'm concerned. We'll take a couple of questions just in case there are any burning questions in the room.
Many thanks, Andrew. I'm just trying to get to grips in terms of the consolidation play where you are now. I mean, you've talked an awful lot about strategic partnerships. You've got 7 services. I'm trying to get you've got customers coming to you. Do you need to just put your foot on the accelerator for further acquisitions and consolidation, or can you achieve some of this or most of this, internally and organically?
It's a good question. So we can achieve some of it organically, but the pace of growth purely organically is not going to live up to my expectation, or indeed to the opportunity that we see ahead of us. So the industry is going to consolidate. It's logical that it would do. You've got this huge imbalance between very large clients and very fragmented small service providers. So that's not sustainable. It's rather sort of fragile at the moment. So it's going to happen, and we have chosen to be a principal actor in that consolidation. So we see that continuing. You could ask the same question. We've just acquired VMC. That was a business that we were competing against up until that point, and some of our growth was obviously coming from business that we were winning from VMC. We could have chosen to continue just to stay there and compete against them, but the acquisition of them not only accelerates ourselves in terms of, let's say, revenue and people count and so on, it also helps drive us to this sort of tipping point where we become the strategic player for our clients. And the other thing it does, frankly, as well, there's a defensive element to it. So whilst VMC remained as the VMC as we knew it, it was okay because we could compete against it. We knew exactly what it was. But if somebody else had come in and acquired VMC, that might have been a very different story for us. So consolidation, as far as we're concerned, and it is a very selective consolidation, we're not by any means rampaging out there across the whole field of play trying to acquire everybody. The selective consolidation, I think, really adds value. It adds value to us, it adds value to the people that work for us, it adds value to our clients, and it adds value to investors. So we absolutely expect to continue to do that. As long as we continue to have the support, of course. Yes?
This is obviously a people-intensive business. How do you guys think about the impact of technology and things like AI and automation and what that could mean for the business going forward?
Yeah. So we we face degrees of automation in our business all the time, and we're ready adopters of them. In fact, in many cases, we're creating those tools and pieces of technology that enable us to perform our services more efficiently. We also stay very close to research and development projects out there in terms of machine translation and to what extent we can implement that within our workflows. I think the answer to this is that it's always going to be there. We're always going to be striving to adopt it wherever we can in the performance of the services. But what we tend to find, and I think this is fairly universal, is that where you can use technology to significantly reduce the cost or the effort of producing some of this material, what happens is you attract a whole bunch more volume volume of stuff that wasn't being processed in the past because it was perhaps too expensive to do that through human endeavor. And so I think in many cases the application of technology actually just makes the whole pie get bigger. And for us as a business, if you look at where technology can impact the human endeavor, it tends to be at the level of, say, an individual translator, an individual artist, and so on. And when you see the pressure that there is out there for talent, there isn't going to be a sort of a threat to our people anytime soon, because the demand for their services is so high that the technology will just allow us probably to help keep up with some of that demand. Any more questions? Thank you very much.